Welcome to the Loner Ranger Radio Show. My name is Bruce Woodburn, and yes, I am the Loner Ranger. CrossCountry Mortgage, been in the mortgage business for 32 years, closed well over 9,000 transactions, still at the same location for the last 20 years here in Winter Park. Hosting two radio shows, one today, Sundays at 11. You may be driving home from church, on your way to church. This is a great time. I really appreciate you guys listening to my show. What a great time to be in the real estate market. Anybody who bought real estate is making a ton of money in this market. And, you know, I preach that buying real estate is the way to amass wealth. There is no such thing as a rich renter. So if you're renting right now, let's stop you from renting and help you become a homeowner. All you have to do is pick up the phone and call me at 407-706-3313, 407-706-3313. I am the Loner Ranger, and my job is to help you become a homeowner. And today we got a couple of big topics I want to talk about. One of them is going to be getting in the market as a first-time home buyer and the challenges that we face. And I have in the studio with me today one of my all-time favorite loan officers and my son, Chase Woodburn, who bought his first home last year and has already made a ton of money on it, and is here to help guide you through what a first-time home buyer can experience, what programs may be available for you so that you can navigate this. Because to be honest with you, if you think that houses and the price of houses are getting out of reach for you right now, they're not going to be better next year. And they're definitely not going to be better the year after that. But we're also going to talk a little bit, and I'm going to prelude this conversation by what's going on in the housing market in terms of rent. So I've got this article from Gail Pascal Brown, who is a reporter with West TV here in Orlando, Channel 2. And she had done some research and has found that 39% of households in Orlando metropolitan area are renters. 39%. So that means that about 60% of people are homeowners. That's pretty positive for the homeowners part. But here's the thing. She did a report, and she was taking information from a woman by the name of Shannon Nasworth, who is the CEO of Ability Housing. And they had reported that in 2020, according to the University of Central Florida, that almost 70,000 metro households in Orlando and surrounding areas earn 50% of the area median income or less. 50% of people that are renting are making less than the median income in the local area, which is pretty devastating. And she asked if that was sustainable. And of course, Shannon says, no, of course it's not sustainable. Well, here's the thing. It's very difficult to get ahead when you're a renter. And it's really difficult if you're a minimum wage earner. And this report was stating that if you were making minimum wage, you would have to work 117 hours a week to be able to afford the average two-bedroom apartment, which is going for $1,321. There's your average apartment. So if you think that housing is getting out of reach, wait till the rent start catching up with you. If you don't get into the housing market now, you could end up living back in the spare bedroom at mom and dad's house or grandma and grandpa's house, or having to live with several families all together. Now, listen, I don't think that's really good, and I don't think it's healthy. So you pick up the phone, you give me a call at 407-706-3313, and I'm going to help you segue from being a renter, which will never get you ahead in life, to being a homeowner. So we already know that rents are going up rapidly. But houses are going up too. But at least if you buy a home, you're going to make money. So with me, I promised I'd bring to the radio show Chase Woodburn, my son, my firstborn, very proud of him. And Chase, welcome to the Loner Ranger radio show.
Hi, thank you for having me.
So Chase, I'm so glad to have you here because you bring so much value to the young person Why did you think it was important? You bought last year, right?
Yes, it's been a year now.
It's been 1 year.
This month.
Yep. So, and you paid under $250,000, I think, for your house.
It was $245.
$245 for your house, and that was even a struggle because I remember you were even having trouble finding a house for under $250,000.
Yeah, exactly. We wanted to be by UCF, and finding a house in that area for that price was a bit of a struggle.
Yep. So. But you were able to find one.
We were.
And then you actually helped structure your own transaction, and you found, because I originally said, well, just go FHA, and you did some other research, and you found that there were some other programs. Talk to me about some other programs that you think might benefit some other young folks out there right now.
Definitely. So I went with a program with Fannie Mae called Home Ready. So Home Ready is a fantastic program for first-time home buyers because it's a 3% down program, which is 0.5% less than FHA.
But you might need that for some closing costs.
Exactly. You might need that for some closing costs. The big thing with me that the Home Ready program allowed for was border income. And we've talked about that before. But border income is essentially a lot of young people. We would like to have roommates, right?
Yep.
So what I was able to do was I was able to carry over a roommate and have a lease for my roommate that I had previously been living with for a year. And I was able to use the rent that he was providing me as supplementary income.
Okay, let's just break this down. So you were renting a house prior to you buying a home.
Correct.
And you had other roommates.
Yes.
2 or 3 other roommates.
I had 3 other roommates.
Correct. 3 other roommates. But you elected to collect all of the roommates' rent and then pay the landlord yourself.
Correct. So it was like they were subletting from me.
But they were on the lease,
But
too?
they were all on the lease, correct.
So they weren't really subletting, but you were controlling to make sure the landlord was paid on time. And you didn't know that was going to work to your advantage, but it ended up being a huge advantage for you. Because then you were able to take on just one of the roommates that rented from you, right? Or rented with you.
Correct.
And then use the income that he had been paying you, that you had been paying your landlord to help you qualify for this new home because your debt ratios.
Exactly.
Right?
It was an extra $450 in monthly income.
And that was what pushed the deal over the limit and made it qualify. So your advice is that if you have roommates and you're responsible and you also had good credit, mom and dad brought you up to always have good credit, pay your bills on time, keep your credit cards to a minimum, pay them off at the end of each month. So you followed that step in even though you didn't have a lot of credit, you had good credit.
Correct.
So the combination of good credit and border income and finding a low down payment loan through Fannie Mae Home Ready program, which you help people with all the time on that.
I've done a couple more of those now.
Yep. But did it give you, are the rates competitive on that, or do you have to pay a higher rate?
The rates are spectacular on them. So with this Fannie Mae program, I saw when I got it, it was a 3%, and I paid less than a point on it. I paid about half a point on it.
To get the rate to 3%.
To get the rate to 3%.
On a first-time home buyer program with 3% down.
Correct.
Okay.
So I've noticed that they are about half a point lower than your standard conventional loan.
So when rates were at 3.5, you were at about 3.
At about 3, correct.
Okay. So now I don't want people to think that they're always going to be a half a point less, but they are lower.
They're consistently lower.
They're consistently lower than a prevailing rate for even somebody that's putting down 10 or 20%.
Exactly.
Now, you had to pay private mortgage insurance on that as well,
yes,
though.
But it is lower. So you're covered.
Lower than what?
It is lower than the equivalent 3% down, 5% down, even 10% down MI coverage.
So wait a minute. So you're saying even though you only put down 3%, your PMI is at a lower factor than somebody that is not a first-time home buyer getting a traditional mortgage
at 10% down.
At 10% down.
Correct.
That's insanity.
Yes. So if you remember, I crunched the numbers for it. Pound for pound, 3% LTV without doing the Home Ready program versus 3% LTV doing the Home Ready program,
Right.
it saves a well-qualified buyer on average $75 a month
That's crazy.
between your PMI and your interest rate.
That's and that was on a 245 house.
245 house.
Okay, so it could be as much as $100 on a $300,000 house.
Potentially.
Now, have you bought that house almost exactly a year ago?
Correct.
Okay, and you paid $245 for it.
Correct.
And you were looking up values just the other day. What's it worth today?
I was seeing 285.
$285.
So
Okay.
about $40,000.
So you've made about 40 grand in 1 year and you would have been paying rent anyway.
Exactly. Yeah.
So now you've got a roommate. You've got two roommates
Yes.
helping you out, right?
Correct.
And I think one roommate's moving out
And another one's moving in.
and another one's moving in. So you're getting other people to help you defray some of the cost.
Correct. So my strategy is that I qualified with one person helping me pay my rent.
Right.
So I am not necessarily collecting any income off of my roommates. We kind of just split it right down the middle 3 ways. But I take the extra money, which is about $450 a month, and I put that towards my principal. So
So you're prepaying your principal.
I'm prepaying principal.
Okay. All right. So I want to talk to you about that because that's not my Leapfrog program and you're in my Leapfrog program. So I like the idea that you're reducing your principal, but you're only at an interest rate of 3%. Do you have money in the stock market right now?
I do.
Okay. Are you making more than 10% on your investments?
In some of them, but not a lot.
Okay. So I'm seeing people making 15 to 20% in the market right now. Even if you were making only 7%, you'd be better off to save that money and put it in the market. Now, why do I want you to save money rather than pay down principal right now? Now, that's not in the future, but right now, why do I want you to do that?
So I can buy another house.
So you can buy your next home. So now, why are you considering buying another home? Why?
I'm considering buying another primary residence in the near future so I can fully rent out my current residence.
Okay.
And then collect some.
So you'll have a rental property at a 3% interest rate. And how much are your payments on that house right now, including taxes?
$1,297 all in.
How much could you get for rent if you rented the whole house out?
Easily $1,500.
Easily
I could rent it
$1,500.
in a week for $1,500.
So now, when you do that, that's when the whole $1,500 goes toward the payment.
Correct.
But right now, I want to make sure that you've got enough money in the bank to buy that next property. If you have questions for the Loan Arranger or you have questions for Chase, he's on my team, you can call us here at the office. You can reach me at 407-706-3313. That's 407-706-3313. Or just log on to our website and do an online application. Super easy, very secure, emails you a checklist of documents to provide. Then we'll get one of our loan consultants like Chase Woodburn or myself on the phone with you to guide you in the right direction so that you can make the right decision and you're informed as to which program fits your needs best, because sometimes FHA is a better program for first-time home buyer. And then are you also familiar and helping clients with USDA?
Yes.
I know you closed a USDA. How much is your down payment on a USDA loan?
Zero
down payment and reduced mortgage insurance.
Correct.
So there's a lot of opportunities for people that may be discouraged based on the prices of homes going up.
Right.
Okay. And if you listen to my show, you know that I don't feel like houses are going to come down in price.
Right.
I don't think that with the inflation that we're experiencing that we're going to see any reduction in price of homes coming anytime soon, even though lumber is starting to settle back down in price a little bit. So when we come back, I want to talk a little bit more about some strategy that our listeners and how adult people can help their adult children and grandchildren become homeowners. We'll be back in 5 minutes with more of the Loan Arranger radio show. Bruce Woodburn and my guest today, Chase Woodburn, helping first-time home buyers. We'll be back in just a few minutes. Welcome to the Loan Arranger radio show. My name is Bruce Woodburn, CrossCountry Mortgage, 32 years in this awesome business of helping people buy homes and refinance homes, and love helping folks when it comes to saving money when buying a home. But I have with me today a very special guest. Love this guy. He happens to be my son. He happens to be one of my loan officers. Been in the mortgage business now just for how long? Chase, introduce yourself.
Hi, my name is Chase Woodburn. I've been working for you and doing a lot of work with your builders since I was 16, 23 now. So I've been an LP1 here, a loan partner for a little over a year now.
Okay, so a loan partner one is what we call an assistant to a senior loan officer such as myself.
Correct.
So I originate loans. A lot of them close. They almost all close in my name, but I have experts that are licensed. Are you licensed?
I am licensed.
Okay, you're a licensed loan officer. Been around me and Mom for a long time,
Correct.
so you know the business pretty well. And you graduated from college.
Yes.
A year and a half ago.
In May.
In May
of 2020.
Of 2020. And then we're working for us, okay, as an entry-level position, bought your first home.
Yes. Bought my house
At
July
20,
last year.
how old were you, 22?
22. Just
22 years old, okay? So, and I tell you this, you guys, and you might think, well, Chase has an advantage over me. So did Mom and Dad give you money to buy the house?
No.
Okay. Did Mom and Dad do anything special for your loan program and help you find some special programs?
No, I did that.
You did all that,
Yeah.
right?
Correct.
Did Mom and Dad help you find the home?
No.
No, we didn't help you do any of that. You set yourself up and you positioned yourself. Now, what Mom and Dad did do is encourage you to always maintain good credit.
Correct.
To establish credit. So when it comes to you and I, helping young folks like you, because I love helping people in their 20s. It's just the most gratifying thing ever is to help a young person buy a home while they're in their 20s. What are some tips that you can advise them to do to get themselves in that position? That's
a great question. The first thing is you want to minimize your debts as much as possible.
Okay.
You want to make sure that if you're looking at the top end of your income range, you want to make sure that you're really minimizing the debts that you have. So that means keeping credit cards low, trying to stay out of getting loans. I know that's a hard thing to do. That's not
But you're saying getting consumer credit.
Consumer credit. Exactly.
Like having a car loan might affect you buying a home.
Exactly. That would
right? But you got to have a car.
You got to have a car.
You got to have a car. So there may be ways that you can maybe get a cheaper car, pay cash for it, or maybe if somebody's going to co-sign, have them co-sign or have them get the car loan in their name, then buy a home, then you can refinance the car in your own name.
Exactly.
What about credit? How does your credit score impact you getting a home as a first-time home buyer?
Credit is profound. So regardless of if you're doing FHA or conventional, it can determine whether or not you qualify.
Okay.
On conventional, your credit score needs to be up there. It needs to be at least 700 if you're going to entertain conventional loans for your mortgage insurance.
Like your 3% down program that you did with reduced interest rates and reduced private mortgage insurance.
Exactly. And if you're doing FHA, your rate might not be affected rate-wise, but your cost, your barrier to entry for the rate, if you have a poor credit score, it might put you out of the running. You might not have the funds to do it.
Absolutely, because if your credit score is lower, then either your rate's higher or your cost of getting that loan are higher.
Exactly.
Okay, so when we come back from the next break, we're going to talk a little bit more about techniques that you can use as a young person and how you, if you're an adult parent with adult children or grandparent, how you can be part of them becoming a homeowner. We're going to talk a little bit about that when we come back from the next break. We'll be back in 5 minutes with more of the Loan Arranger Radio Show with Bruce Woodburn and my guest, Chase Woodburn. Welcome Welcome back to the Lone Ranger Radio Show. My name is Bruce Woodburn, and I am the Lone Ranger. Today, we've been talking about how we can help more first-time home buyers in this environment where rents are going up faster than mortgages, and houses are going up so fast that they're becoming out of reach for the first-time home buyers. So I brought one of my specialists, Mr. Chase Woodburn, on board with us to share the journey that he went on when he bought his first home last year, the experiences that he had. We talked a little bit about the opportunities for first-time home buyers and the programs that exist for them. 3% conventional, 100% USDA, 3.5% down payment for FHA with marginal credit scores, how to use border income, how to get a mortgage for 3% down and a reduced interest rate and low PMI, all those things we talked about in the last segment. If you have questions and you'd like to talk to Chase, one of my loan officers, or myself, or if you have adult children that are renters right now, get them out of renting and get them into home ownership. If you're going to help your kids, help them become a homeowner. It's the best gift you could ever give them. You're going to leave them your money anyway. Leave them some money now so they can buy a home. Come on. Don't tell my kids I said that, but I mean, be honest. Like you'll co-sign for a car, you'll co-sign for a student loan. They'll have $80,000 in student loans and they'll make $45,000 a year. That's ridiculous. Where you could help them out with 10, 15, 20 grand for a down payment on a house, and they'll turn around, they'll make $20,000 in their first year, if not more, in equity. It's the best gift you could ever give them. Let's stop the renting and start the home ownership. All right, along with me, I've got Chase Woodburn, one of my loan officers, been on my in the business, watching mom and dad do mortgages for a number of years, but got licensed when he got out of college at UCF last year, bought his first home on his own. He shared with us the journey that he went through in using border income and researching all the different types of financing that were available to him. And if you have questions for him, you can call him directly at the office at 407-869-8830. His extension is 132, or call my number and I'll connect you with him at 407-706-3313, 407-706-3313, or webringyouhome.com. Chase, thanks for joining me today on the show. I really appreciate that.
Thanks for having me.
You're welcome. So I love the fact that you did all your own research to discover what programs were available for you when you bought your home. Right. Now, for all the folks that are out there listening to us, because I've got people listening out there that may be renters right now.
Right.
Maybe they've never owned a home. Maybe they don't think home ownership is ever in their future. Okay. But let's dispel a few myths. First of all, if you had a 600 credit score, can you still buy a home as a first-time home buyer?
Yes.
Okay. What kind of loan program would you do for that?
You're going to want to go FHA.
Okay. Now, when it comes to, what if you had a 590 credit score? Is that possible?
That's still possible.
It's still possible. Absolutely. Now, if you had a 750 credit score and you had a high debt ratio, 50%, what kind of direction might you lead into there?
That's a great question, actually. As we know, FHA is slightly more lenient when it comes to your debt-to-income ratios.
Yes.
Than conventional.
Right.
However, when you go FHA, you have some fixed costs associated with the loan that may make it more expensive than going with a more favorable conventional program.
So if you had a high score but a slightly high debt ratio, it still might work conventional.
That is a situation where you would want to run the numbers both and see which one comes out on top.
Yep. So you wouldn't guess when a client calls you, you'd say, let's put the numbers together. Let's get your income verified. Let's pull your credit. Let's look at your debt ratio. Where's the cash to close coming from? How much cash to close do you have? Then you structure the loan to meet the client's
Exactly.
needs.
And as we talked about earlier, a $245,000 house, your Fannie Mae Home Ready is $50 to $75 cheaper a month than your standard 3% down conventional.
Right. So for the same program,
it's $75 cheaper. And conventional, if you have the credit score and the means to do it, is generally cheaper monthly than FHA because your FHA has a fixed mortgage insurance.
That's correct. So you have PMI upfront and monthly on both loans, but it's higher on an FHA loan than it is a first-time home buyer, home ready, Fannie Mae, which is conventional loan.
Correct. So in some cases, if you're, like we said, on the fringe there, or you're really close on your debt-to-income ratio, maybe doing a first-time home buyer program like Home Ready will eke out enough savings to keep you below the 50 debt-to-income ratio that you need to be at.
That's okay. So we've now got opportunities for folks that may have good credit and qualify for a first-time home buyer program like Home Ready. Now, Freddie Mac has got another one too.
Freddie Mac has an awesome program.
Yep.
And with Freddie Mac, you get to take advantage. A lot of young people have student loans.
Right.
Freddie Mac allows you to take 0.5% for student loans as opposed to the full 1% that Fannie Mae takes.
Well, Fannie Mae changed that, though. Now, they just changed that guideline this month, so they're now allowing you to use the 0.5% rather than 1% on that right now. And on Fannie Mae, and you can use, if you're in an IBR, an income-based repayment program, you can use that payment as well.
Right.
But on FHA was 1%. They went to a 0.5% as well. So, excuse me, I got that. FHA went to a 0.5%.
Correct.
Fannie Mae did not.
Yes.
Freddie Mac did. My apologies. I
Yes.
got my Fannies, Freddies, and Ginnies mixed up there. So, conventional Fannie Mae still 1%. Freddie Mac 0.5%.
FHA 0.5%.
FHA just went from 1%
Correct.
to 0.5%.
Correct.
So all of these things, it sounds confusing for us. It's definitely going to be confusing for you. We'll sort that out for you, make sure we guide you in the right direction so that you've got all the information and are able to qualify for the best program that meets your needs. So what other obstacles are you seeing with young buyers right now trying to enter into the market?
The big thing right now that I've noticed is cash to close for a lot of people, right?
Okay.
So, and one thing, I had a client recently that I helped out with this. The rates for the Home Ready, Home Possible are actually so good that right now they are some of the few programs you can get a rate rebate. So
really?
I had a
What
client,
does that mean?
A rate rebate where we are likely familiar with a rate buy down,
Right.
to where you pay the investor money and you
get a lower rate.
To get a lower rate. A rebate is the opposite, where the investor, being Fannie Mae, Freddie Mac, Ginnie Mae, will actually reimburse you for getting a higher rate.
Okay, so in other words, if the rate was 3.125, you could go to 3.5 and maybe get the client $1,000 toward their closing costs.
Exactly. I had a client that was short about $2,000 cash to close, and we were able to bump them from a 3 1/8 to a 3.625.
Right.
And they were able to close.
So they closed. They wouldn't have closed because they didn't have the money.
Correct. And they couldn't do that FHA. They couldn't even do it normal conventional. It had to be the Home Ready program.
Well, I'm going to tell you something. That takes a lot of research, and it takes somebody, a professional. You're not going to get one of these online rocket companies to do that. They're not going to do that. Now, if you got an 800 credit score and you're putting 20% down and you're just literally a cakewalk, dream boat, then maybe those loan officers can help you. But most people have some challenges. Okay, they don't think they do, but they may be self-employed. Okay, they may be 1099. They may have some credit challenges, some debt ratio, and it takes somebody that can really navigate which loan program is going to meet your needs best and guide you in the direction so you can get the best rate.
Correct.
Right? So because sometimes we will counsel a client and go, you know what, you got a 680 score, but you know your rate would be a quarter point better if I could get you to 710. And you do a credit analyzer, boost the credit. Now, that sometimes takes money for them to pay down a credit card or pay off a debt. By the way, if you're listening to this, never, ever do your own credit repair. You will do more damage than you will do good. Believe me, I got a client right now that thought that by paying off all of her debt, her scores would go up, and they went down. And she was like, I don't understand this. And I'm like, I told you, let me run an analyzer, and then we'll get the best results for it. So don't do it on your own. Hire a professional. You're not going to pull your own tooth out on your own, and you're not going to remove your liver. You're going to go to a surgeon for that kind of stuff. Come to a surgeon. We're mortgage surgeons, aren't we?
We are.
We're mortgage surgeons. That's what we do. That's my new title. Not the loan arranger, the mortgage surgeon. There we go. So if you have questions, you can call me at 407-706-3313. That's 407-706-3313, or go to webringyouhome.com, where you're getting all the information you need to become a homeowner or to refinance. So doing tons of refinances. If you're paying the rate in the 4s, give me a call. Good Lord. You're paying a rate, I can get you down in your payment. Now, here's what I love. I love helping people go from a 30-year to a 15-year, because now you're going to be debt-free when you retire. Completely debt-free. Let me show you how to do that. No cash out, refi, 15-year, beautiful loan, still in the 2s. So you can get a great rate. Back to the low down payment, first time home buyer. Your biggest challenges are cash to close.
Correct.
Getting money. Now, can you borrow from a 401k?
You can.
You can. Can you withdraw from a 401k?
You certainly can.
Can you get a gift money from grandma and grandpa?
You can get a gift member from immediate family.
From any immediate family member?
Correct.
Okay. Now, do they have to sign any documents?
They need to sign a gift letter.
So the gift letter, did they just draw up a gift letter on a napkin, or do you give it to them?
We have a gift letter template that we will provide you with all the information. You just put in the bank account information and sign the date.
Okay, so the borrower signs it and the donor signs it.
Correct.
Now, on a conventional loan, does the donor need to provide any of their documentation?
They do not.
They don't need to provide anything. On an FHA loan, what does the donor have to provide?
The donor will need to provide bank statements to evidence that they have sufficient funds to gift.
Right. So they've got to give a copy of their unredacted bank statement for 1 month to prove the transfer of the money and that they had adequate funds.
Correct.
Pretty darn simple.
Dead simple.
Right? Now, believe it or not, though, Chase, I've had issues with donors in the past that don't want to provide that information. But if the buyer is going FHA, it's a requirement. They have to provide it. There's no way around it. If it's conventional, they may not. But we're not diving into this to the donor's information. We're just getting a copy of their bank statement. That's it. They don't have to sign anything other than the gift letter.
Right.
Okay. Other challenges other than cash to close, I think, can be debt ratio.
Exactly.
And one of the big factors are student loans.
Exactly. Yeah.
Student loans can be a real issue. But we got a gift from Ginnie Mae, which is HUD, which is FHA loans, and they lowered the requirement from 1% of the student loan as a payment. So in other words, if you owe $50,000 in student loans, you have a $500 payment.
Right.
That just dropped to $250. That was a huge gift.
Yeah, that was amazing.
So that's a real benefit as well. Other challenges may be just improving your credit.
Right.
Or not having enough credit.
A lot of young people don't have credit.
I recommend that your utilities go on your credit. You can have your utility company report that, and you must have at least 2 credit cards and keep them at extremely low balances. Don't charge them to the max and then pay them off and go, oh, I always pay them 0 at the end of the month and wonder why you have a 590 credit score. It's because when the credit bureaus are reading it, you're at the max. Keep them under 30% all the time. If you have questions for me, if you have questions for Chase Woodburn, one of my finest loan officers, and my son, and I'm so proud of him. He's done so well in this business. And I'm telling you, you won't find somebody that will work better with you. He really cares about you guys a lot. You just call 407-706-3313. That's 407-706-3313, or go to my website at webringyouhome.com. I'll be back in 5 minutes with more of the Loan Arranger radio show and how we can help teachers, law enforcement, and first responders. Welcome back to the Lone Ranger Radio Show. We're wrapping up this hour. Man, I'm telling you what a lot of fun I've had having Chase Woodburn on the station with me today. Just a wealth of information on helping first-time home buyers. If you know somebody that's renting right now, get them over to us right away. Let us help them. We got all the programs to help folks that are currently renting and maybe first-time home buyers get into some amazing products. If you miss my show on Sundays, you know, you can always catch me on Cleve Loveland and the Lone Ranger Radio on Saturdays at noon. But maybe you're missing that as well. You know, I've got an iHeartRadio podcast you can listen to. Just check me out on iHeartRadio podcast. You can check out Bruce Woodburn, the Lone Ranger, on YouTube channel. Got tons of YouTubes. I record every one of these radio shows on YouTube. You can always check them out there. I have a Spotify podcast, pretty substantial Facebook page. Okay, not to be confused with any salad incidents that are going on with the criminal salad investigation or salad gate, ridiculous event that happened where, you just check out my Facebook page. You can see all about it there. So, any rate, here's something that is important, because salads are not that important. They're important for you. I like my roughage, but here's what's really important. Helping people become homeowners or refinance to save money. That's what I do best. That's actually all I really do really well. There's a lot of things I don't do that well, but that I do really well, and I love doing it, and I love helping you. But here's the thing. There are no nationally or state-funded programs to assist law enforcement, first responders, nurses and healthcare workers, and teachers. If you fall into that category, I'll repeat that again: law enforcement, first responder, healthcare workers, nurses, and teachers, any educator. There are programs that exist through me at CrossCountry Mortgage that give you real dollars toward closing costs and or reduced interest rates. Listen, you're not going to, you can't beat this program. There's one that's supposedly designed for veterans, and I'm going to tell you something. My veteran program will crush it, because they want to give you money after closing. I get you money for the closing. Same with my teacher, law enforcement, first responders, and healthcare workers. It's $2,196 toward your closing costs. Okay? Reduce costs all the way around. It's real dollar savings. Okay? If you are in the police department and you are part of the Police Benevolent Association or the FOP, Fraternal Order of Police, I am the official lender for the FOP, and in South Florida for the Police Benevolent Association. You're going to get discounts. You call me at 407-706-3313. If you work for Advent, Orlando Health, or a doctor's office, dentist office, psychiatrist, I don't care who you work for. You're in healthcare, you call me. I got huge savings. Okay, all of you folks, I do tons of Advent Health, tons of Orlando Health folks, call me. If you are a teacher, you work for a private school or a public school, I got discounts for you. There's no one around that'll pass on a better discount to you, and no one around that'll take better care of you than the Lone Ranger. Matter of fact, we're part of the teachers union, and I'm doing a presentation, I believe, in Lake County next week or the week after next for one of the teacher unions. We are the official lender for teachers as well. So why would you go anywhere else? It doesn't make any sense. If you're a business owner, you want to help your employees, I'll show you how you can introduce an employee benefit program that'll help your employees become homeowners, and they'll stay with you longer. Thanks for tuning in to the Lone Ranger. WeBringYouHome.com is my website. That's WeBringYouHome.com, or call me at 407-706-3313. And the Lone Ranger, I promise you, will help you become a homeowner or refinance and save money. See you next week, same time, same place.